Good evening, everybody. It's Harry Boxer, the technical trader. It's Monday, July the 26th. As promised yesterday, a review of some of the boxer shorts and some of the best of the boxer shorts. To prepare you, if and when the market does roll over, there are some nasty looking charts. We saw a lot of good ones today. We had a terrific day in trading the long side for the most part, but there's still a lot of ugly charts, and let's go over them. Here we have Almost Family, which has been on our list since the stock broke in May, around 37 down to 23, and yet even with the bounce back here, it looks to me like the stock has lower levels to go. Let's step back a little bit, look at the long-term picture. You'll see that there's a line of support in that 20-21 zone, 22. That's what I'll be looking for going forward. Although if the stock does snap back towards resistance at around 27 and a half, 3/4, that may be an opportunity to get short. AMED continues to get hammered, having dropped from the mid-60s down to the low 20s just in the last 90 days, 4 months or so, with stair steps down and pennants and flags, and the stock just looks continually terrible. We may be in an area here that is a long-term support that could bounce the stock back, but and we look for a rally back towards 26 and 3/4 to 28 in that zone. If it comes on low volume with poor technicals, you can reconsider shorting it. Cerner, CERN, has dropped back from the 93 range down to as low as the low 70s. You can see the down channel that is formed, but there is a long support line here going back about 9 months that, if broken, could lead to sharply lower levels. Excuse me, the stock had just recently bounced off secondary support here around 72.5 and is back towards declining moving averages. A little bit higher up around 79.9.5 is the declining 50-day and top of the channel. So look for a potential move up on lower volume with continually poor technicals to get short this one. CareFusion, CFN, it's been in a declining channel for the last 90 days. It's bounced back a little bit here, but without much participation from the technicals, and maybe setting up for more downside. Ultimately, a retest of the lows down around the 1920 zone, maybe even as low as the IPO, post-IPO levels around 18, may be doable, or even lower. Computer Sciences, after topping out left shoulder, head, right shoulder, kind of head and shoulders top, broken it in May, rallied back twice to resistance and the moving average, and then fell down to create a new declining channel. Recent action is more of a bear wedge here, with non-responding technicals, and the stock now approaching the declining tops line and the declining 50-day moving average. We could see this one fall away and reach the low 40s, my next trading target. Duo Yuan, Global Water, DGW, has been in a nasty decline and an ugly down channel since it broke in January when we put it on our list. The stock has subsequently dropped in half from about 33 to under 17, down to 16.5 or so. Bounced back, but notice where the bounce back is to. So far, just back to the declining tops line moving averages with extremely non-responsive technicals. So I'd look for potentially a rollover to lower levels and the stock getting to the mid-teens. DGX has recently broken hard, completing a mini top here, and then a massive top, left shoulder, head, right shoulder here. Snapped back to it and failed and rolled over hard. Now we could get a bounce to take this to 46.5, 47, where I'd consider shorting it again. But this stock is a bit oversold short term. But I did want to show you the pattern, because there is the potentiality that if the momentum continues to the downside, this stock could be down around the 38, 39 zone. DO, Diamond Offshore, completed a top formation and broke hard in May. And then you can see that after it broke again in early June, it snapped back to resistance and then began to form a big bear coil, a bear wedge. Right now, near the declining moving average, this stock could be in for a fall to retest the June lows around 55, our next trading target. FTI Consulting, FCN, had a big break. Finally snapped back slowly here, but it's formed what I consider a bear flag of sorts. Non-responsive technicals. We're up against overhead resistance near the gap. This should fall back and at least retest. Looking for a move down to 31.32 to retest. We'll see if it gets any lower than that, though. Gilead Sciences has been in a steady declining channel since February, when it was on near 50. It's dropped down in the low 30s. but yet, despite the current break and this attempted a bounce, almost completely non-responsive technicals, actually making lower lows. This looks to me like it has more downside to go, and I'll look for a move down towards the high 20s. Global payments GPN has snapped back to declining top sign of moving average, again with non-responsive technicals. We're now at the top of the channel and near lateral price resistance. A move down here could reach down to retest the 35.5 level, maybe get as low as 33.5. My trading targets. JDAS broke it with a band in here, broke sharply in June, made lower lows, and then has worked its way back up towards resistance at the declining top sign of moving averages. But again, pretty responsive, lack of response on the technicals, and lower levels look doable. Let's look for a test of that gap in here around 23, maybe a retest of the lows around 21. JST, after a big sharp break and an ugly pattern that took out the declining tops line and took out this entire wedge program pattern, is now forming another bear flag of sorts, and although it may reach up a little bit higher towards 13, I use that opportunity as a short for a move down, eventually get down to $9. MHS is broken hard. Medical Health Solutions, along with a lot of medical stocks, are breaking here. You can see this massive top formation was taken out with a plunge, and now it looks like a little bear flag forming. But even as snapback to 52-ish, I'd consider shorting, as this stock may have more to go on the downside. Next target down around the 40-41 level. Oceaneering forming a big wedge underneath the breakdown point here. Bounce back to it once, twice, three times. We're in this zone here that if it breaks down from here, it could get clobbered for a retest back to 39.40 at the very least. Breakout here, you got a very short stop point and minimum risk type trade. QLogic broke hard this week, bounced 22 cents today, but got hammered yesterday for 309 or 16%, and have broken this entire topping pattern. Could lead to lower levels. I'm looking for a move down towards 12, 12.5. RIM in a down channel for the last 4 months has pulled back in a wedge type formation with lack of response in technicals near the declining tops line, moving averages, and price resistance. A low risk trade here that can be covered with a move over 57.7.5. Downside target, a retest of the lows around 47.48. Student loan continues to look ugly. It refuses to bounce. Even the technicals look lousy. And I'd still call for more lows here that maybe gets down towards the 17-18 zone. SWI, Solar Winds, took out a massive one-year type popping pattern, pulled back to it, and then fell away. Quite oversold short term and may be in need of a rally back, but this stock has more lows written all over it. And last day is Stryker, SYK, that completed a massive top formation, broke down, and is forming a little mini bear flag in here. I'm looking for lower levels that takes us down for a test of 40.41. Those are your short ideas for now. This is HP signing off. Bye-bye.